Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. It is Hump Day, everybody. It's a Wednesday morning edition, 2018. Hope everybody had a great trading day yesterday. For those of you new to the channel, make sure you click the subscribe button below so that you get the daily updates as we release the videos each day. For those of you that are new to the channel, we look at the same 10 to 12 futures markets every day, identifying potential trades, turning points, breakouts, and look at them from an educational perspective. But the key is we leave the lines on the charts, holds me accountable, holds you accountable, and allows us to see how trades develop over time. So let's dive right in. Looking at the S&P, so we're down about 47 points this morning. Yeah, you heard me right. 47 points at 5:16 in the morning, Central Time. I think we're down on the, I think our latest was the Chinese trade wars, where we talked about, well, I'm saying trade wars, it's maybe a little bit over the top, but it's there was the article that we're going to tax 1,500 items coming in from China. I think that was the number. Everything from flamethrowers to surgical masks. So that's I am ethically opposed to the taxing of flamethrowers because flamethrowers just sound cool. But all in all, it's really caused us to come hammering down just in the last few hours, really. And this happened in the overnight hours. So right as the London market opened is when we saw the huge sell-off. Now, yesterday I had talked about not trading the breakout. And let me explain why yesterday I said discretion is the better part of valor. And why I didn't want to take a breakout. And this is where I had tweeted that I hadn't seen very many false breakouts when it's the right setup. And yesterday was an example of where the false breakout occurred. Take a look at this. Big move down would have caused somebody who traded this breakout the wrong way to get short. And then, boom, pops right back up. Then causes somebody who trades the breakout long to get long. And then, boom, right back down to get them stopped out again. So this is a shakeout, freakout, breakout, like I talked about yesterday. And that's exactly what happened. And that's really why my point yesterday was just stay away, allow it to do its thing. And it did wind up doing its thing, and it rallied up throughout the day. And when you look at the numbers, it's, oh, look, we had a big up day in the market. Well, yeah, but our big up day in the market has not been able to produce any new swing highs. We've had no new swing highs. Matter of fact, I moved to the 4-hour chart, and this, if I were to teach trends, this is how I would teach a downtrend. It's lower swing highs and lower swing lows, and this downtrend is continuing. We're about to test the February lows, not quite down to them yet. Now, that being said, it's not a bad thing that we're testing those February lows, and this is, this pattern of price is something that we've seen in the past. If we go back, just back to the end of 2015, we had a very similar price pattern through here. Before then, we had a very strong thrust higher, and that's exactly kind of the pattern that we're setting up here. Here's another example of this low here didn't quite test those lows, but you do get the retest oftentimes of lows a second time through. This is not a historically inaccurate thing to see as far as a retest of some lows. Here's where we had it once, and then a retest of the lows on a weekly chart. So, the lows will oftentimes get retested on multiple occasions, and I think that that's what we could be here. I'm still not ready to change my overall, as an investor, longer-term bias, but as a trader, absolutely, we need to be looking for smaller time frame opportunities that are definitely more geared towards the short side. So I think that we will probably get some sort of a rally here soon. I'm not sure exactly though where it'll come from, so I'm staying away. I'm not going to try to buy a bottom on here because I've got no quality buying opportunities. But I do believe that this could be a little bit of an overreaction today, and theoretically though we could make it all the way down to 25.12 before we see any sort of a bounce. So I don't really see much of an opportunity for me to get in on this thing right now. If I want to go to a much smaller time period, can I re-jump in at some of these areas back here that formed a little bit ago? Yeah, that there's definitely some opportunity, right here off of what we just broke out of in the wee hours of the morning. So, you could take a rally back up to this area here. I'm going to edit those properties and turn it into purple. If we have a purple line, it means that we are looking for a 15-minute level. I don't really go any smaller than a 15-minute level. I think that your probabilities get too low when you go below those. So here is a potential for an entry on a reversal right here. Looking at the Nasdaq also moving down, not quite down as much as the S&P in the overnight, because I don't think as many companies that are would be affected by the trades are getting hit as hard in the by the announcements. So we'll see though. Nothing for me to add. In crude oil, we've just broken through our crude oil level, but notice this is a dashed line. If any of you can tell me what does a dashed line mean? Oh, wait, this isn't an interactive thing. A dashed line means that we wait for price to come into the level and we get long as it comes back out of the level. Well, did we get that chance here? No, we did not. It blew right through the level. So should this cost us any money? Absolutely not. This should be just simply a trade that just did not get filled because it did not follow the rules that we set in place. Remember, everything we do is rules-based, and this broke all of them. So I will say that the breakout that we had here, this is one of those times when sleeping gets annoying because this would have been a perfect breakout trade. But, you still I still do need to close my eyes on a nightly basis, and I'm certainly not the kind of guy who feels like I've got to catch every trade, and that's really an advantage to you. You don't ever have to feel like you have to catch every trade. So as much as I joke around about it, don't stay up until it's 4 o'clock in the morning. I got to give Eric a hard time because he was texting me before I went to sleep, and he was the first person that was tweeting to me this morning when I woke up. So I got to give him a hard time and figure out if he ever sleeps. But gold is really kind of my next market, my next opportunity. We've kind of seen a little bit of strength in gold. Obviously, over the trade wars, there's a lot more fear, and gold becomes a kind of a safe haven, if you will. I am a little bit concerned with this safe haven, though, because of these upper wicks here. This would be a standard reversal setup for gold right here, which is the reversal that we got earlier in the week, and now we're kind of coming back up to it. This actually is the setup for a good breakout long. We're not there yet. It's not quite set up and it's not formed yet, so I'm not going to leave this line on the chart, but this is actually a setup for a long breakout with all those sellers unable to hold. That would tell me that we may get a little rollover, but if that rollover doesn't come as deep as here, then that may lead to a decent buying opportunity. If I slide this to a 15-minute chart, even on the 15-minute, I don't have a great entry to get long again until down here at this one little candlestick in between those areas, which was right at the open. I'm going to throw this in purple here. One of my favorite setups is when I've got a reversal candlestick or an indecision candlestick above a pivot low. Those are usually fairly decent reversal points, so I'm going to leave this level intact as well. Looking at our bond and currency markets, so the ZN, which was our 10-year treasury note, we did not get down to our level yesterday. I was really kind of hoping that we would come back down and retest this area. This is that indecision candle above a pivot low that I was just talking about. We were unable to get back to that area. I'm going to leave this area intact for now. Looking at our Aussie, so the Aussie still in between our areas, so nothing more to add there. The euro still coming off of this short. We're close to this long. I'm going to change this long to a dashed line. Reason I'm going to change it to a dashed line is the fact that we were unable to get back to it, and we didn't get a strong move away from it either. So while it's still in play, and I got to remove, you know what, I'll leave this one in because I think we could still get another move off of this area. So this short worked out pretty well. This long is now in play if price does get to it. Canadian dollar, look at this, touch and go. However, we've hit a high and then started to kind of come down fairly strongly through here. Once again, this is all centered around the news around those the Chinese tariffs. So almost getting to here. maybe scares me away a little bit from this area, but I'm gonna hold strong to it for now. I want to see what our arrival is into that zone. So in the Japanese yen, we've got an area still up above us in through here. Nothing major to write home on that one. And then Great British Pound, we're not near our breakout to the short side yet. I will say that, you know, this is putting in what could be a pretty decent buying opportunity on a breakout to the upside. As we see this area here get tested a couple of times. So right in through here, I see that we've got an area that seems like it's been tested a few times. You know, this is actually a pretty good reversal setup. That's what this is right here. Well, no wonder it's not working. I'm clicking on the wrong. Wrong buttons. I'm clicking on the wrong buttons over here. That's what I wanted. There you go. That's a pretty decent reversal right there. And that reversal right there hit it once, hit it a second time, hit it a third time. So the more often that we hit it, the weaker that's going to become, because we're removing any of the past inventory of orders in that area. And so I'm going to put a breakout potential above that level for something worth looking at in the future. Let's put our line right here. All right. So that's kind of what we have for today. I think that we've got, you know, today's one of those days that I feel like could become a 100-point down day in the S&P, and it still wouldn't give me a great opportunity. And so I'm going to be very patient in waiting for my opportunity. I'm not going to overreact, and I'm not going to reach. I think overreacting is the kiss of death in this style of market. I'm going to say it again, overreaction. Matter of fact, I'm going to switch this to a dashed line. Overreaction is the kiss of death in this type of market. So just keep that in mind. Follow your plan and make sure you understand where your stop losses are in play. And I will see you tomorrow. Later.